Yeah, the will he bend the knee? I think it's interesting, right? I mean, obviously, all the buzz has been about tariffs, and right, I feel like tariffs are really the narrative that have finally caused the cascade of selling that reverts much of the overpricing in the market back to the mean, right? I think we were talking right before this, right? Should some of these companies have been trading at the valuations that they should have been trading at, right? Um,
Welcome back, everybody, to another episode of WAGMI TV. We have a rare macro episode for you guys. It seems very timely at this point. We've seen a big correction that kind of seems to have been coming for quite some time. We're going to talk about, hey, is this the correction we've been waiting for a couple of years? Is this just another kick the can down the road scenario? Is the Fed going to cut rates again soon? We'll kind of talk through some macro indicators, talk through the Bitcoin chart, and maybe even get into some yields here at the end. So with that, I'll kick it over to Zoe, and we'll go from there.
Yes, sir. The name of the game this week, guys, is volatility. There's volatility everywhere. As Garcia mentioned, the first time we really had like a major correction. We had a mini one there with the yen carry trade unwind last summer, but beyond that, we haven't really had that much until now. Obviously, the name of the game right now is tariffs, and everyone has their eyes on that, and so. We're just going to go through a couple of the macro charts, both on the volatility side, looking at equities, bonds, and then we'll take a look at, kind of what the bond market is doing. Then we'll hop into some Bitcoin there with Armada as usual. So let's pull this up here. First chart that we have our eyes on right now is the VIX. This is obviously the implied, forward-looking 30-day implied volatility for the equity market. It's absolutely ripped. And if you look back in time, the times that it has ripped like this have been huge periods of market correction, usually pretty decent buying points. And so that's kind of like what we've had our eyes on here, whether it's, the spike in 2020 with COVID, not that much lately, and then last summer in August, the yen carry trade unwind, huge period of volatility, ended up being a decent buying opportunity. And then this week, the last, call it few days, has been a real spike, VIX getting all the way up to 60. Then, the other chart we want to keep in mind is the move index. The move index is basically the 30-day implied volatility for the bond market. And so, most people say, you want to keep an eye on the bond market because that's where a lot of the smart money is. And so we're also seeing a huge uptick in volatility on this side. Again, last time we saw it at this levels were going into the election here. So people basically putting on election hedges. That didn't really materialize into anything. But, a few other spikes here have just been crazy times in the bond market. So another one that we're keeping an eye on here, clearly spiking up pretty high right now. Let's see, what else do we want to look at? So let's go to the 2-year yield. This is usually what we keep an eye out on to see how the market is pricing rate cuts. And so you can see, call it from January to now, a few more rate cuts have been priced in for the year. We'll see if that materializes. Today we had a huge rebound, and so we're kind of waiting to see, is this the signal here, or is it just kind of like coming back, and then we're going to retrace further down depending on what the Fed says, depending on how the economy does. Another one to look at, 10-year yield. I know Evan's been kind of paying attention to this one. Again, from January, coming down pretty substantially, had a rebound here. So kind of curious what you guys are thinking, at least when it comes to the 2-year and 10-year. Ev, do you have any opinions on it?
Yeah, I mean, I think you did a great job of outlining that, but I think it's really an indicator of what we see the Fed do in that early May meeting. It's the question of, are they going to cut rates? How many times are they going to cut rates? I think I saw today that there was 5 potential rate cuts priced into the market. And I think the big discussion that we're seeing is whether the correction that we've seen in the indices, like the S&P, like the NASDAQ, if this correction has those cuts or the recession indicators priced in, or if that's not priced in yet. So what does that mean? Is this going to go lower, or are we going to stay at these levels and see some relief because of potential cuts that we're going to see down the road from the Fed. I think it's tough to say, but it seems like Trump, for the most part, is holding tough on the tariff talk. And so with that, like that's going to make it even tougher for the Fed to do their job of, keeping inflation at a steady rate. So I think this is like a great indicator because it's really going to show us where the market is pricing the Fed to behave down the road here. But yeah, you guys got any thoughts on this?
One of the things I also like to look at in terms of, when we see things really going downhill, we usually see credit spreads on the high yield side and the investment side blow out. What that basically means is like people are dumping bonds because the probability of defaulting on some of these riskier loans is going up. That's one thing that I have noticed here in the last couple of weeks where, the HYG index, which is the high yield bond index, has actually dumped fairly hard. That's something you don't really see that much. So even back here, in like July, August, when we had that scare with the yen carry trade, you can see the high yield bond index didn't really move, signaling that like the bond investors weren't that worried. Even though the stock market was dumping, people weren't that worried about the risk of actual defaults in the economy going up. Here we actually it's not as bad as it was. Like this is COVID, right? I mean, this fell off an absolute cliff during COVID, and that's when you knew when things were getting really really bad, right? And likely a signal for the Fed to come in and have to step in here. Here, we've started it a little bit, but it's definitely not obviously not to this extent. So something I'm also keeping an eye on there, in terms of like how severe is this? What is the probability of actually, economic slowdown and things like that. Now, that's kind of the high level on the macro
And real
side.
quick, Zoe, real quick, I'd love to hear from Mata and Cio what you guys think. I think there's, a lot of different opinions going on in the macro, so be interested to hear what you guys think.
No, I agree with you, Ev, where I think that Trump's not going to back down from the tariff side. It's kind of at this point political suicide with how much he's married the idea. And I think the other thing, too, that he knows, that everyone knows, is that there's $9.2 trillion worth of American debt that expires this year. So at the end of the year, we either need to pay it off or refinance it. I think we all know we're probably not paying that off. That's more than we like. I mean, it's too much money. And so I think what's going to happen is Powell's going to get into a corner probably in the fall, and they're probably going to have to cut rates again, as long as Trump stays, where he's at right now. So I don't know. I think it's basically Powell versus Trump right now.
Yeah, the will he bend the knee? I think it's interesting, right? I mean, obviously all the buzz has been about tariffs, and right, I feel like tariffs are really the narrative that have finally caused the cascade of selling that reverts much of the overpricing in the market back to the mean, right? I think we were talking right before this, right? Should some of these companies have been trading at the valuations that they should have been trading at, right? But either way, right, tariffs being a narrative or not, they're going to have impacts if they stay in place, right? And that's the big if, right? Are they staying in place? What's the goal? And I think that's what we really haven't gotten out of the Trump administration as a whole. Is it the 4D chess type of move that Garcia was kind of referring to, of like refinancing some of the rates? Is it a bargaining chip to get folks to the table to start to renegotiate some of these trade deals? Who knows? I feel like they haven't been very clear one way or the other what the actual goal is with the tariffs. And because we have this kind of uncertainty, that's what the market really doesn't like. So at the end of the day, if these sorts of things stay in place, they have an impact on the consumer, which has impacts on consumer spending, which drives the US, obviously GDP, leading to inflation, and therefore the Fed's ability to actually cut rates, which is kind of what we've been talking through today. So there's obviously been a ton of optimism up until this point around money printing and how that's obviously helped fuel kind of the rise in equities over the last really couple of years at this point. Has really just been the money printing. So I think the real question is, when are we going to get clarity on what the deal is with these tariffs, what the goal is, what the off ramp is, and how long is this going to go on? And I think that's what the market's really waiting for. They're just super uncertain at this point, and tariffs are kind of what caused that cascade.
100%. I think we, everyone on this channel, everyone who watches this show is obviously heavily into the crypto markets. So wanted to give you guys the macro backdrop there, and then hop into the old Bitcoin charts, check out some of these crypto charts. So I'll throw it over to Mata for that.
Yeah, let's dive into it because I think sometimes what's helpful is to just really zoom out on something like this, right? So what we did here is zoomed out, tried to make it fairly simple. In the blue, we have kind of these general trend lines, upward trend lines that we're used to seeing in Bitcoin. And then we do have the horizontal support lines as well in orange that we see coming up here. So a couple of things. I think one thing we were talking about is like, is this really the end of the bull market, right? Just from a probabilities perspective and looking at the chart, right, something to be optimistic about is we actually never came up from a technical analysis perspective and actually touched this blue line, right? I was expecting us to do that. Could this probability not have worked out? Yeah, that's potentially possible. Could we have seen a double top here to send us back down for another bear market? It's completely possible. But something else to consider, because we didn't actually hit that, and it is a fairly decent probability that we should have. If we think about how far we came down back last year, right? Our correction was about, looks like 33% or so. So far from the highs in this correction, we're down about 32%, right? We're coming into some pretty solid support. Obviously, that high from March of 24. And then, of course, the previous all-time high from November of 21. So we're coming into some pretty good support. Obviously, it's gone much quicker than this did last year. We saw a lot more chop. But at the same time, if you think about probabilities and how quickly this has moved down, we're likely to at least see some sort of bounce here, right? And so that would actually coincide really nicely with the S&P chart as well. Apologies, this one's a little bit more messy. What you can see here is that we actually came down and touched the previous all-time high from January of 22, which is really interesting, right? So you would, if you were obviously betting on probabilities, you would bet there would at least be some sort of bounce here. So again, I think it all kind of leads back to the question of, when is the market going to get clarity? When are we going to understand when the Fed's going to be able to make a decision, make their move, etc., on whether or not this is like, is this just a bounce to continue downwards? Is this just, one of those really big sinks like we saw during COVID where we have a really massive V-shaped recovery? I don't think that's something that we know yet. What we do know is there's obviously been a pretty good amount of selling. Bitcoin and crypto actually held up fairly well, I would say, throughout this. But often we see crypto as kind of that leading indicator. So we're going to be looking a lot at the crypto market, a lot at the bonds, a lot at these yields, obviously all the things that we went through today to really start to understand, what does the health of this market look like? Is this just a normal correction? Is this something that's going to be a little bit longer? But yeah, of course, we'll keep you updated on that in this channel. That's for sure.
Love it. Love it. Great points, everybody, all around. I think, obviously it all depends on what's going to happen from a macro standpoint and rates getting cut or not. But I think basically everyone is in agreement here that it was overdue. And so it'll just be a question of how far are we falling and, when is that bounce back coming? So obviously keep you updated on that. Obviously this is not financial advice, just for entertainment purposes only. We try to keep you guys as updated as possible. But let us know in the comments what you think. Did we find our floor? Do we have more to go? Curious to hear from you guys. But like, comment, subscribe if you got value, and we will see you next week. WAGMI.